Hello, this is Brian Shannon from AlphaTrend's Blogspot. It is Saturday, the 10th of February, 2006, and we're going to go ahead and take a look at some stocks for trading on Monday. I've got shares of Concur Technologies on the screen right now, symbol CNQR. This is a stock that I had mentioned on Friday, but didn't give any specific instructions about how I would trade it, and it really didn't do much of anything on Friday. So let's take a look at what we've got here. We've got a stock that just recently popped up on big volume, and actually it was related to earnings. So the company reported better than expected earnings. It popped up above all these moving averages, and now it's holding on to these gains very well as the volume is consolidating, dried up rather. The stock is consolidated on lighter volume. That's what I meant to say. Anyways, this prior resistance level seems to be acting as support in here in this general area near about 16.5. If we look at the weekly time frame, I think it's reasonable to expect that this stock's going to at least look to challenge these highs from last year near $19 a share in the near term. And if it can get above that, then it could possibly continue higher. We're not going to look for anything more than that, though. In fact, our price objective is going to be $18.25. That's our upward target for this stock. And how I'd like to play it to get to that would be just a buy above $17.10. You can see that it had some resistance at that $17.10 level on Friday. And we also have that 5-day moving average, which it will have cleared if it can get above 17.10. So buy it above 17.10. I think you set your stop below Friday's low, so we could put it down at about $16.76. That would give us a risk of approximately 34 cents and an upward objective $1.15 away. Next up, we're going to take a look at shares of NSIT Enterprises, symbol NSIT, another company that reported better than expected earnings, up on big volume, and that's what we want to see, is a big volume event as it breaks out, followed by a low volume consolidation. Friday we saw a little bit more pickup in the volume here, and it looks like the stock might be getting ready to move higher once again. Let's go ahead and take care of the upward target first. We're going to look for $21 a share on the stock. So our target is going to be $21 a share. And what I'd like to do is buy the stock above $20.25. So we'd be looking for about 75 cents of upside, and I think the stop could go at about $19.95. So 30 cents of risk for the opportunity to make about 75 cents. Not the best risk reward, but still for every dollar of risk, you've got about $2.50 of potential reward. So I think in this market, it's still worth considering as a potential trade. And if the stock moves 10, 20 cents right away, make sure on all these trades, if it moves 20, 30 cents, actually set your stop, raise your stop to break even right away, or sell a small little piece. Do something to diminish the risk, take a little bit of the risk off. This market is getting pretty choppy in here, and I think that it just pays to be a little bit more defensive in this current environment. Hoku Scientific, we got involved back here, I think at $5.20 a share, that is, a couple days ago, and got lucky with that gap, sold half of it, got stopped out of the rest right there. But I still think the stock looks like it has the potential to continue higher. Look how that volume is dried up right in there after the big volume event. I think that looking for about $7.50, $8 a share is where the stock is going. But again, we're going to be more conservative with our target. Let's take a look at the short-term time frame and see how to play this here. I think getting above $5.70, where we had a little bit of resistance on Friday, would make me interested in purchasing the stock. I'd then set my stop at about $5.45, so that's 25 cents of risk. And the target in this case is going to be $6.40. So if we take a look at $6.40 right around in here, and that would give us about 70 cents of upside for approximately 25 cents of risk for Hoku. And this stock could get going even better, because when it goes, it can go real good. It tends to be one of those speculative stocks that traders pick up on and get it going a little bit crazy. Allstate, symbol ALL, broke down on a gap. I didn't read the news on why, but it scared the heck out of some people, and they big volume event. A lot of times what you see is this big volume event. We get a short-term rally, which occurs on diminishing volume. That diminishing volume shows the demand is drying up for the stock, and now it looks like the the sellers are back in control. We've got the stock came up to its declining 10-day moving average. The 10-day moving average often acts as support early in an uptrend, followed by the 20 and the 50, and then we see the same thing on the downside where it'll often act as resistance early on. So let's take a look at how to play this stock. I like the fact that it rallied late in the day on Friday. Now what I'd like to do is just sell the stock short below $61 a share. I think that puts the sellers back in control. We'll put our stop up here above 61.42. So that's 42 cents of risk. I just want to put it below that 5-day moving average, or rather just above that 5-day moving average, because these New York stocks can get a little bit choppy. But we sell it short below 61 with a stop at 61.42. I think our objective is down here near about 59.5. So 42 cents of risk for the opportunity. Looks like it makes about $1.50 in profits if we're right on this trade. Cameco, symbol CCJ. Let me retype that in here. CCJ. This stock is looking like it's breaking down again. It broke down. This little support might be now acting as a resistance. You can see we had that heavy volume event followed by low volume subsequent on the little rally that we've seen up here to this declining 5-day moving average. So here again, I'd like to just simply sell this stock short on weakness below $37.15. Below $37.15 puts the sellers in control of the short term. And I think that a stop goes 40 cents away at $37.55, right around here, back above that 5-day moving average. And our target is going to be $36 a share. So that would give us 40 cents of risk for the opportunity to make $1.15.